Hey, good afternoon, everybody. Going to go over our trades for today, Thursday, July 7th. We just had a correlation trade, a correlation swing trade last night, where with a size-adjusted basis, we pulled out 4.5 pips. On a non-size-adjusted basis, it was in the neighborhood of about 17 pips. So we'll go over that in a minute. It was a correlation between Kiwi yen and Aussie yen, but we'll go over that in a second. First, just want to talk about the economic news. Last night, the S&P downgraded Australia from stable to negative, and we're going to talk about that when we go over the correlation trade that came out after we were in the position. It wasn't a scheduled event, and, they just came out with it. As far as this morning, initial jobless claims slightly better than expected. ADP jobless numbers slightly better than expected, although construction jobs lost 5,000, manufacturing jobs lost 21,000. Unfortunately, manufacturing is only about 10% of our economy now, and manufacturing jobs were really really created a lot of the middle class in this country. Just going back 10, 15 years ago, manufacturing was 20% of our country. Going back to the to the 60s, manufacturing was probably 60 or 70% of the economic structure. So we're dwindling. We're going more and more to service oriented. It's not a good thing. That's why it's one of the reasons why the middle class is disappearing. Let's see what else news came out. So tomorrow's non-farm payroll, unemployment numbers with initial jobless claims and ADP. Initial jobless claims is a weekly number. They don't carry much weight. Neither does the ADP number. Doesn't really carry a whole lot of weight. But they were both better than expected. So maybe tomorrow's non-farm payroll will actually come in a little better than expected. If you recall, last month it was absolutely atrocious. There was just no way for anyone to put a positive spin on last month's numbers. What else this morning? For the first time ever, the UK government sells 10-year bonds at interest rates under 1%. Our 10-year treasury actually sold off a little bit, bouncing the yield up a hair from the record low set the other day. So that's, the UK under 1%. European bank default risks have been spiking today, and Italian banks have crashed to new lows despite passing a stress test and the government banning short selling on not just bank stocks, but many other stocks. So this could be a contagion. It could spread. We're going to find out how systemic it is. Even Deutsche Bank is in massive trouble as well. One analyst put the odds of them going under at over 30%. Deutsche Bank, I believe, hit a new low yesterday or today. Tried to bounce today and sold off again. So things are not looking good. It could be this could be a whole nother Lehman crisis, and maybe Italy will be the one to take the blame, but we all know it's not just Italy. That's it for the news. As far as our swing trade, we got a signal to go long. This is the beauty about correlation, by the way. By instead of just taking the swing trade, if you could get a signal in one that you can correlate, because not all of them can you correlate. Like euro dollar, for example, doesn't correlate very well with too many pairs. So you would just take that swing trade on its own. But when you get a signal on one that is correlated, Kiwi dollar to Aussie dollar, Kiwi yen, Aussie yen, Euro yen, Swiss franc yen, dollar yen, Swiss franc yen. Those, US dollar, Canadian dollar to Euro Canadian. They're highly correlated. So when you get a swing opportunity, you should really really consider taking the correlation position, because this is a prime example. So last night we get a signal to go long, Kiwi dollar at 71.454. We correlated it with Aussie dollar by shorting it at 0.75227. Now, about a half an hour, maybe 45 minutes later, that news from Standard & Poor's downgrading Australia from stable to negative breaks. It comes out. You can see the spike down in Kiwi dollar because they're highly correlated. And here's Aussie dollar spike down even more. So now we had 40% of our normal size in Kiwi dollar. Aussie dollar, we had about 35% of our normal size. So look what happens. Kiwi dollar, when the news came out, we figured we started becoming a profit very quickly. We figure let's take the profit because who knows if that's going to change the algorithm on this Kiwi dollar with that news, with this price action. Now, as it turned out, it did not, and look at that beautiful move in Kiwi dollar, as it turned out overnight. But while we're in the trade, you're looking at a profit with this Aussie dollar spiking down off that news. Again, we don't know how impactful is that news going to be on Aussie dollar as well as Kiwi dollar. I mean, that's pretty big news, right? Standard & Poor's downgrading the entire country. So, as it happens, Aussie dollar, we had 35% of our normal size, where the Kiwi dollar, we had 40% of our normal size. Even though we had more size in Kiwi dollar, it didn't fall as hard as the Aussie dollar. So our Aussie dollar fell much harder, even though we had about 10% less size. With that said, we liquidated the position. So Kiwi dollar, we sell at 0.71218 for a loss of 23.6 pips, or adjusted for size, 9.5. And Aussie dollar, since we were short from 0.75227, it was coming in hard, right, from that news. So we covered 0.74828, picked up 39.9 pips, or adjusted for size, 14 pips. You can see what it did. After we covered, it went even lower. It traded down to 74.65, almost, let's call it 13 pips more, 17 pips more than where we covered, but it consequently bounced. Now, the bounce didn't propel it higher as it did in Kiwi dollar. So ultimately, the algorithm was right, but since we were correlated, we were able to make money on a signal that was temporarily actually dead wrong. Okay, granted, it's a swing. You're not taking huge size. You're going to be risking more than this if you were taking it on its own. But again, when you're looking at a profit, you don't know how much that news is going to impact price. You don't know how much that news is going to impact going forward, the future of it. So why not take it and move on? And that's exactly what we decided to do, which I think ultimately was the smart move on our part. We can always get back in if we so chose. So that's it. We're going to wrap it up. If any signals come out, they'll be coming your way. Tomorrow's Friday, so we won't be trading. We may do some trades tonight, which would carry over to next week. So if we get some trades either tonight, Sunday night, Monday morning, we'll do a video Monday afternoon, and that's it. So good luck if you're trading now. If you have a great weekend, and we'll be back Monday, assuming we get that action. Have a great rest of your day.